Terry, let's begin with you, sir. Your short-term view on Treasuries, where we are, where we're going, and then the long-term.
Yeah, so short-term, I think yields are going higher on the 10-year Treasury, and the reason is because inflation is making a comeback in the U.S. I think we're going to see surprises, positive surprises on inflation during the summer. It seems inevitable to me with oil prices doing what they're doing recently. So 3.25% I think is a first stop. Long-term, there are other issues as well. Higher deficits in the U.S., the prospect that savings rates in the U.S. are going to come down because of demographics are all things that conceivably can push the 10-year yield higher in the long term. But we're still going higher in the short term as well, by a little bit.
Jim, 30-year yields have been like the last man standing on the Treasury curve. They're starting to break out a little bit. We've seen that over the last 24 hours. We're starting to see the curve steepen in an interesting way over the last week too. 2s, 10s has gone from the low 40s and a breakout through 50 as well. Are we starting to play that reflation game a little bit more again?
I think we are, and I think that inflation is expected to rise. Year-over-year base effects are very easy to beat, so we know they're rising in 18. The question is, will they continue to accelerate in 19? That'll give us the answer to the curve. When yields rise, it's really hard for yield curves to actually steepen. You generally don't get bear steepeners. You typically get bear flatteners, right? You know.
Yeah.
So effectively, if we look at 3.25% on the 30-year, that's going to be a big level. Is there room for yields to move a little bit higher, for inflation expectations to creep into the markets a little bit more? Absolutely. Is it an out-of-control situation right now? I don't think so.
So we've got a consensus view that yields are going to drift higher, David. Then we've got an out-of-consensus view, which is the dollar's started to strengthen because rates are recoupling with FX. How do you trade those two forces? How do you put them together and rebalance portfolios if you need to?
If you're a domestic U.S. investor, it's difficult, maybe impossible, to trade the foreign exchange markets and the domestic U.S. dollar bond market. They don't work together. They work in opposition. And the forces that are driving foreign exchange are now not U.S. We are the relative choice. And the other forces in the world, Japan and more so in Europe, we'll talk about Italy.
We will.
Are huge.
Yeah.
So if you sit in a place like Singapore or Dubai, you love the 10-year Treasury at 3 or 3.25 because of the relative comparison and you like the currency. How long will that last? Impossible to know.
Terry, once you fold FX hedging costs into this, are the Treasury markets starting to look a little bit more attractive than they otherwise once were to the foreign investor now?
I think so. The fact that the curve has steepened recently effectively animates the view that Treasuries are looking a little bit more attractive if you're financing them. But that should not negate or it should not confound the idea that the 10-year yield is going to go a little higher. So if you're quick to finance a position long in the 10 years, I think you're going to get hurt. You can get hurt by all sorts of things coming out of the U.S. data in the next few weeks.
Just quickly, Terry, rates recoupling with FX, is that what we're seeing here? And can it last?
Look, there was a theme in the marketplace in the latter part of 2017 and late 2017 that said because of the tax reform, because deficits are going to accrue in the U.S., the dollar is going to become an emerging market currency, let's say. It's going to lose its reserve currency status. And that theme was very well aligned with higher yields as well, because you want to get out of Treasuries if you believe that's the case. There's a different theme in the marketplace today. Okay, I think people have forgotten about the twin deficit story in the U.S., and they're simply focused on the premise that the U.S. is winning.